Welcome to Introduction to Commercial Law. Today we are going to be talking about sale agreements. So sale agreements are a specialized type of contract. So you have done general principles of contract, you have done the requirements for validity, and so on. So let's now look into a specialized form of contract in the form of a sale agreement. So sale agreements are basically the most common type of contract that you come across. So every day, in most cases, we all encounter or transact, and by those transactions, we enter into sale agreements. And these sale agreements give rise to a number of obligations. And let's look into sale agreements in more detail. So in this lecture, we are going to be doing the definition of a sale agreement, and we'll also be discussing what is exactly considered to be an object of sale as part of the definition of a sale agreement. So the law of sale is a specialized part of law of contract, applying additional requirements to that of the general principles of contract. Therefore, the general requirements for the contract must still be present, as well as, for example, the requirement of consensus, which basically means the meeting of the minds between the parties. The requirements of lawfulness should also be present, which basically means that a contract should be enforceable in law. So similarly, the consequences for a breach of contract also exist under a sale agreement, however, with additional consequences that ensue in that respect. The law of sale examines the requirements for there to be a valid contract of sale between the parties and the consequences of a breach of a contract characterized as a sale. So fundamental to the law of sale are two important concepts. The first concept is one of ownership, and the second concept is possession. So as well as that, the risk in the thing can transfer before possession does, right? So in order for you to truly grasp the meaning of ownership, you need to be able to distinguish it from the concept of possession. So intangible rights can be sold, as can things that one does not own. So possess or that do not yet exist. So there are certain things that can be sold, and these things can also be intangible. So for example, you can sell things that cannot be touched, like for example, shares, right? Then you can also sell things that you do not own or possess. Then you can also sell things that are not yet into existence. For example, if you're a farmer and you want to sell crops, you can sell crops before you harvest them, right? So all those things will qualify as sale agreements as well. So a contract of sale is the most commonly encountered type of contract in practice. The law of sale has become considerably more complicated since the introduction of the National Credit Act and the Consumer Protection Act. It can be said that the law of contract and sale in South Africa now consists of three distinct sections, and these are: the first one is the common law of contract and sale, which applies to all commercial contracts and to consumer contracts insofar as the Consumer Protection or the National Credit Act does not override the common law. And the second is the consumer contracts and consumer sales, which are governed first and foremost by the Consumer Protection Act, unless they are governed by the National Credit Act. And thirdly, consumer credit agreements, which apply to the exclusion of the Consumer Protection Act, except insofar as the goods are concerned. For purposes of these lectures, we are going to be focusing only on on the common law. So we are not going to be looking at the Consumer Protection Act or the National Credit Act. Okay, so the definition of a sale. Usually a contract of sale will be concluded with the owner if a person wants to have ownership of something. However, it is not a requirement for valid sales contract that ownership must be transferred from the seller to the buyer. Although the buyer may normally expects to obtain ownership, the seller only needs to provide the buyer with undisturbed possession of the object. Therefore, transfer of ownership from the seller to the buyer is not a requirement for a valid sale agreement. A commonly recognized definition of sale is when parties who have required intention agree together that one party will make something available to the other in return for payment of a price. That is the definition that is acceptable. However, this definition is criticized for failing to distinguish between a contract of sale and a contract of lease. So you'll find that this definition would also apply in the explanation of what is considered to be a lease, right? So it does not mention whether ownership is being transferred or is only possession that is being transferred. So possession is transferred under a lease agreement, and in this case, ownership is the intention, but it's not defined in the definition. In addition to the normal requirements for a valid contract, there are three essential requirements for a contract of sale to come into existence. Number one, there must be an agreement on the object of sale. And number two, the seller must promise to transfer ownership or to deliver undisturbed possession to the other on a permanent basis, and the buyer must promise to pay a specific or determinable amount in return. Now, if you look at this, you'll be able to distinguish between a sale and a lease. So we are saying that the seller must promise to transfer ownership, right? So if they're not going to be promising to transfer ownership, they have to deliver undisturbed possession to the other on a permanent basis. Right? So the clear distinction between this and that of a lease is that under a lease, possession is transferred but not on a permanent basis, and the buyer must promise to pay a specific or determinable amount in return. This also applies to lease agreements. However, under a lease agreement, the payments are normally done in monthly payments or yearly payments and so on for a specific period. And in this case, under a sale, the thing is given a determinable amount, and that amount should be paid in order for that transaction to be complete. So where the contract provides that the buyer will not receive ownership on a permanent undisturbed possession, the contract is not one of sale, it's probably going to be one of lease. So where both parties know that the seller is not entitled to sell the thing, for instance, where the property is stolen property, the contract will be void due to illegality or legal impossibility. So the object must be determined or determinable, so that means that the thing that is being sold should be identifiable and should be described so that all parties know what exactly is the object of sale, meaning that what is it that is being sold. So the buyer and seller must reach agreement on the identity of the thing, the nature of the thing, including specific descriptions if it's a generic object. Right? The identity or nature of the object sold must be determined or determinable at the time of the conclusion of the contract, and the identity or nature is determined or certain if the parties know exactly the identity of the object. So you cannot enter into a sale agreement where you promise to sell something without necessarily specifying what that something is. If the identity or nature of the object is not certain or ascertainable, the contract will be void due to vagueness. It is therefore important to ensure that the object is sufficiently well described in the contract within reason. The object of sale may be movable, immovable, specific, generic, corporeal, or incorporeal. It can be something that is in existence now, or it can be something that will be in existence in future. The sale of certain types of objects may be prohibited in total or restricted or subject to certain conditions. So you may find that certain products are sold in compliance with particular legislation that regulates sale of those products. So an agreement for sale in contradiction of such prohibition is void for illegality or for failing to comply with the legal requirements. So the seller does not have to own the goods that are being sold in order for the contract to be valid and binding. Although the buyer expects to become the owner of the goods bought, the seller's obligation is to deliver the undisturbed possession or use and enjoyment of the goods to the buyer. There are 4 situations where goods not belonging to the seller may be validly sold. Right, number 1, the seller sells generic goods which it reasonably expects to receive from its suppliers. And number 2, the seller sells a specific thing which it reasonably expects to obtain from the owner. And the seller fraudulently sells someone else's property without any reasonable belief that it will obtain property. The buyer has bought goods in terms of an installment sale where ownership of the goods has been reserved by the original seller until payment in full has been received. So those are some of the circumstances in which one may transfer objects that they do not yet own. So where goods have been sold and delivered by a person who is not the owner, the true owner can reclaim its goods from the person now in possession of them, and that action of retaining the goods or reclaiming the goods is known as actio rei vindicatio. Right? So if somebody steals any property from you, you are entitled at law to institute what is called rei vindicatio by simply going to vindicate your property or to take back your property. So this action provides strong protection for the true owner, whilst the person currently in possession must rely on a claim for damages against the seller. It sometimes happens that the owner sells the object to 2 different buyers in consecutive sales. So this situation may be dealt with in a few different ways depending on, number 1, whether or not delivery has occurred and whether or not the second buyer was aware of the agreement between the seller and the first buyer. Okay, so that brings us to the end of this lecture.